Today I want to mostly talk about silver. And, I don't know if you'll let me just go here. I watched an interview on Palisades Radio with a very, very fascinating man named David Jensen. I want to give him credit for a lot of what I'm about to talk about, but it got me digging into what he was talking about because it made so much sense. So I started digging myself, and I find what he had to talk about fascinating. And I think when you put all of this together, it starts to put together an interesting thought experiment, if nothing else. So, I think today, I'm glad you put on your silver tie. I think today we should talk about silver, if that's okay by you.
Absolutely. Yeah, go for it.
So this morning, now again, I've really been trying to put all this together over the last few days. So excuse me if it lacks a little bit of coherence, but I hope it does. Because there's a lot to take in, but I'm trying to put it all together so people can understand. Today, we've talked a lot about the arbitrage going on in the Shanghai Metals Exchange, Shanghai Gold Exchange. Today, 28th, silver closed at $36.01 on the Shanghai Gold Exchange. They can't hold this down anymore. They can't. And when you see open bids in Shanghai for $36 silver, I think it's just the beginning. But let me try and put all this together. So it appears as though we have the makings of what could be a giant silver squeeze. And I would also argue it appears to me Zoltan Pozsar was dead on. I think in 2020, he called the Bretton Woods 3.0, number one, when we took over from the pound sterling, number two with the petrodollar in 73, and now number three, the system that will be all about commodities and transparency. And it's as if the commodities are becoming more valuable than money. And let's call it currency, not money, more valuable than currency. There's an old saying, he who has the gold makes the rules, but you could go even further and say he who has the gold, the silver, the rare earth metals, the copper, all of the commodities, hard and soft, make the rules. And when you think about China accumulating the London Metals Exchange, when you think about China striking deals for natural resources all around the globe, when you think about, including food, wheat, corn, soybean, you name it, when you talk about the BRICS nations in general being commodity rich, this begins to make great sense. And it seems to me that the gold and silver markets are literally playing by a new set of rules that I've never seen before in my time, 34 years in this industry. The resiliency of the market is astounding to me. These are things that never have happened before. And I think especially silver. And when you look at the COMEX numbers and you can see that these bullion banks, the cartel bullion banks, have been holding back the price of silver for a very long time. In fact, 4 or 5 commercial banks holding the largest concentrated short position in any commodity traded on COMEX. It's in silver. But as the price has been rising, the losses on these commercial banks' balance sheet has to be extraordinary and borderline unbearable at some point. And they're going to be forced to cover the paper shorts. And I think that's something that we've always just taken for granted. People will say, well, they can just keep doing this forever. You can in an environment where the demand for those commodities is non-existent, but you can only manipulate a market over an extended period of time by pushing it in the direction that it is truly going. And the trust in the United States and the Western system has been extraordinary for a very long time, but it's as if the glass has been broken. And putting back that glass is akin to putting back the trust that has been shattered, at least across the entire Southern Hemisphere, if not most of the globe. So lately, there's been a lot of talk about the global inventories disappearing in silver. I mean, you look at COMEX, it's been bled dry for years. We've talked about that. You look at the LBMA, it's got the lowest level of inventory, second lowest level of inventory for sure in the 140-year history of the exchange. And now we're beginning to see things on Shanghai disappear. We've seen, and we'll talk about that, we've seen the ETFs be bled dry. Everyone says, well, there's great availability in the retail market. Well, That'll change. It'll change really fast if what I'm seeing is actually happening. The American public has been asleep at the switch. They have been infatuated with NVIDIA and Bitcoin. They've even been infatuated with the 5% return in treasuries with no risk. I understand all of this, but they're missing what could be a generational move in metals and in particular in silver. Now, there was a lot of talk, and Mr. Jensen talked about all of a sudden you have bullion bankers showing up at the Shanghai Metals Exchange. Now, remember, the numbers on the LBMA, we're told there's 800 million ounces of silver there, of which 500 million belong to the ETFs. And when you realize that leaves 300 million ounces, that's about what is left on COMEX in the entire ecosystem. In COMEX, about the same amount, but in COMEX, there's only about 40 million ounces backing the contracts. The rest of it is eligible and it's not for sale. So who knows what the real numbers are, but they are, 300 million-ish or less globally on the Western system, and probably a lot less backing everything. I'll keep that in mind. But I did some digging myself, and I went right on to the Shanghai Metals Exchange website. And you can see for 4 straight weeks, starting the second week in March, first we had Deutsche Bank, then we had HSBC Bank, then we had JP Morgan, and then Standard Chartered Bank show up one after another for 4 straight weeks. And Jamie Dimon evidently is there right now. And could there be a coincidence with these 4 bankers showing up? And since that first week in March, the Shanghai Metals Exchange have bled down in silver to a new low not seen since 2020. Who knows what deals were struck in the back room at the Shanghai Metal Exchange, but it becomes really interesting when you realize something that I didn't realize until watching Mr. Jensen's interview, and that is that gold cannot be exported out of China without first depositing a bar into the Shanghai Exchange. So then you can export it. So this is contrasting with silver, which can be exported. And it would seem to indicate to me that the banks are there not to talk about gold. It would make no sense. They would have to deposit their own gold first into the vaults in order to export it. It makes no sense. They're there to talk about silver. And it almost speaks to a desperation. Please help us. We're trapped. We have massive short positions that are naked, and I'm going to get into that, but we don't have the silver. Help us. We'll work out a deal. Maybe it's gold related. Who knows? But look, we know that silver imported almost between 5 and 600 million ounces of silver in the last 2.5 years. And again, to put that in reference, COMEX silver inventories are roughly only 40 million ounces of silver, and they're rehypothecated over 1,600%, right? So 16 people hold the same contract, and it's probably a whole hell of a lot more than that. And we do know that the LBMA inventories are down to their lowest level or second lowest level, debatable, in the 140-year history of the exchange. This becomes even more interesting when you realize this. They have these huge naked short positions, and the inventory levels on both exchanges are at record low levels. You have countries like India importing over between 5 and 600 million ounces. That would be way more than is available in any of these 2 hubs. You can start to see the significance.